And we're delighted to be joined again by Dr. Anton Didenko. This is the second in a 4-part series. So in our third instalment, we'll be talking all things cybersecurity for fintech businesses. And in the fourth instalment, we'll be doing a deep dive into the enhanced regulatory sandbox and how that compares with other sandbox approaches around the world. The first event in this series was published a few weeks ago now and was around the emerging trends that we're seeing in fintech and regtech, a broad-based discussion and to set the scene really for episodes 2, 3 and 4. And today we're talking about Anton's most recent paper on the topic of central bank digital currencies, which is aptly discussed in the context of the payment system, and particularly 3 key systemic disruptors in the payment sector. So that is Libra, the DCEP, which we'll go through, and COVID-19. So the paper, which we will include a link for, is titled After Libra, Digital Yuan and COVID-19, Central Bank Digital Currencies and the New World of Money and Payment Systems. So, Anton, in the paper, you and your co-authors suggest that stablecoins have been around for years, but it was the Libra announcement that was the game changer, and that discussions and some trials of CBDCs have been around, but it is the DCEP that is hastening central bank research and more substantive efforts around designing and implementing a CBDC, or actually you include CBDCs as a subset of the more global term sovereign digital currencies, which we'll get into. So let's begin by briefly defining some of these terms and what one has meant for the development of the other and what regulatory response each has stimulated.
Thank you, Joni. Well, speaking of the terminology, I think a different paper that was published, I think 2 years ago, on specifically the terminology issue would be maybe even more useful for us. So maybe you could add the link to that one if that's useful. But I think it's really important to follow a single set of terms to be able to have a meaningful discussion in this context. And really, the starting term in any discussion on different types of currency is the payment system. And there are many definitions, but a very simple one is provided by the Bank for International Settlements. And it simply defines it as a set of instruments, procedures, participants, rules for the transfer of funds in an economy. Pretty straightforward. And so the formal payment system, the one that's endorsed by the state, based typically on the duality of money issued by central banks on the one hand, that's in the form of cash or central bank accounts that are typically only available for select users, not for everyone. There are some exceptions, of course, some interesting historical exceptions in other jurisdictions. If we have the time, probably not. And the second part is, of course, commercial banks' money that is individual bank accounts, which are in effect records of individual bank liabilities to their clients. But there are also now, in particular, informal payment systems operating in parallel to the formal payment systems, and those rely on the use of different alternative types of currency, such as cryptocurrencies. And in the paper, we discuss mostly we'll focus on the subcategory of cryptocurrencies known as stablecoins. And stablecoins are emerged as a response to the perceived lack of transparency and uncertainty and the lack of fixed underlying value in cryptocurrencies like Bitcoin, which, as you know, has its value determined by essentially how much one is willing to pay for it. And so this leads to huge swings in price we've seen over the years. It was worth almost nothing at launch more than 10 years ago. And so you can make the calculation how many thousands % increase that is. As for the definition, I think Joni, you were asking for a definition. The best one probably, no, there's no best definition, they're all horrible. but the most widely used one, perhaps the most recent one of the most recent ones, is provided by the FSB, the Financial Stability Board, as it defines a stablecoin as a crypto asset that aims to maintain its stable value relative to specified asset or a pool or basket of assets, something like that. And of course, and it's apparent from the definition, the elephant in the room is the problem of linking the value of stablecoin to real life assets. This is so-called stabilization mechanism. So this is in the name, a stablecoin. So what stabilizes it? It can be clear and straightforward, or it can be very, very obscure and leading to questions of whether it really offers any improvement over things like Bitcoin. And the example I always come up with is Tether. I think it's one of the world's leading stable coins by market capitalization, at least. And if you look at the online disclosure on the website, you can go and check straight away. I checked it this morning, and you'll see that the description doesn't really contain any promise to ensure that the stablecoin is fully backed by fiat currency, at least. Instead, well, it was at launch, but the description gradually changed over time, and what you can see now is a watered down version of its past self. So now, if you look at the website, it essentially describes that each unit of a stablecoin is one-to-one pegged to a US dollar, and is always valued by the issuer at $1, which is not really the same as saying it has the same value, right? It's just I can value something as much as I want, in theory, if I want it. So basically, the stability of this stable coin is based on the reserves, that is assets that are included in the basket, and those are quite diverse. It's not just cash, it's also cash equivalents. That includes other assets and receivables from loans, I think the website mentions. And all that is still provided that we even trust the description on the website, right? I checked the description on this morning, and I think the so-called proof of funds document that's published on the website was issued more than 2 years ago. I think it was June 2018. So let's say that there are reservations about stability mechanism of stable coins. And so it's no wonder that we're not all using stable coins today in everyday transactions.
Just for some context, if I could jump in there before we move on to the other definitions, I generally put a few buckets to stablecoin. So we've got the fiat collateralized or the fiat perceived collateralized. Then we've got crypto collateralized, which are generally over collateralized to balance for the volatility of the underlying cryptocurrency collateral. So you might have it 500% or 700% collateralized to peg to $1, for example. And then we've got algorithmically collateralized, which is what we see with MakerDAO and their stable coin and DAI, sorry, the name was escaping me. And so, you've given Tether as the example of cash or cash equivalent like collateralized, cryptocurrency collateralized. There are a number of examples out there. I think Compound is one of them, a lending protocol, and then, like I've just said, DAI, released by MakerDAO. So with that context in mind, try and find the right bucket to categorize your stable coin. And within that bucket, there's a number of other issues, regulatory issues to be on point to consider. So then now that we've established this definition of stable coins, can you walk us through what each of Libra and the DCEP and CBDCs generally also mean?
Thank you, Joni, for jumping in and helping me, because I was trying to cover stablecoins in the most simple, in the simplest of ways, and you just uploaded a bunch of very important, relevant, and possibly complicated stuff. But I think this is exactly what we need in this kind of discussion, because we can't really proceed to discuss Libra and CBDC without considering the breadth of scope of the term stablecoin and the issues. We probably don't have the time to discuss because there are some really interesting purely legal issues associated with stablecoins in particular. In which case, can they be considered? Can they fall under the definition of electronic money in some jurisdictions? It's fantastic. I wrote about this years ago, and only now the regulators seem to be joining on board and saying, "Hey, yes, you're right," but whatever. So Libra was essentially a new type of stablecoin at first. When it was proposed by Facebook in the middle of 2019. And I think the key feature of Libra was immediately picked up by Mark Carney, then governor of the Bank of England. He was speaking at a conference a couple of days after the announcement, I think, and he said, I don't have the quote, but the substance of the message was that whatever really works, and I think he referred to the Libra, would become instantly systemic. And given Facebook's and the Libra Association's membership, I think it was clear that the stablecoin backed up by those kinds of issuers and supporters would potentially become instantly systemic. And so Libra really prompted the creation of a new term, global stablecoin, that we can see again. The bodies like FSB have tried to define, and I'm again referring to the FSB this time for definitions as the second best option. And I think the FSB defines the global stablecoin as a stablecoin with a potential reach and adoption across multiple jurisdictions, and also the potential to have to achieve substantial volume. So the elements are really huge size, huge scale, and interconnectedness within the economy. And when Libra was announced in June 2019, it was supported by a large group of major businesses, including eBay, MasterCard, PayPal, Visa, Uber. They all became the founding members of Libra Association, not-for-profit, headquartered in Geneva, tasked with governing the platform. But subsequently, there was a huge regulatory backlash, and several members, PayPal, Visa, MasterCard, eBay, Stripe, all those big shots, left the association. And to me personally, Libra was, from a purely technical perspective, was exciting because it really represented the evolution of ideas underlying Bitcoin and all that came before Libra, but on a smaller scale. And it was, to me, something that governments that maybe were thinking about developing central bank digital currencies somewhere in their backyard could look at and to consider as a litmus test for new technologies. That is, what does the market, not the government, what does the market treat as the best technology achievable at the time? So that to me was the value of the Libra proposal, because we don't see it still, right? And we didn't see it back then. It's a project, but there's value in it, in the project itself. And there was some proposals relating to the consensus algorithms within the Libra proposal, which I won't discuss. I don't think I have enough time, but so there were adjustments they wanted to introduce, moving significantly away from Bitcoin to develop this new stablecoin and new technology. But following the backlash, and we saw Libra 2.0 announcement, a new white paper, and I have to say that this new Libra is a shadow of its former self. It's no longer a litmus test of what's available or what's possible, or rather, I think it's now a litmus test of what's allowable, what the regulators are permitted to allow in the current setting. But of course, from a purely technological perspective, that's unfortunate.
And I think it links nicely, sorry to jump in there again, but in our first episode, we were talking about, that the ACCC is waking up to the powers of these huge digital platforms, and that perhaps, even by doing a digital platforms inquiry, it is too late to intervene in terms of spreading competition more widely, or being able to spread that competition and which does take, it would take some market dominance away from those digital platforms. And I can just see it in the regulators' minds that if the Libra Association were permitted to launch this global stablecoin, that again, it's another initiative, this time, you know, which goes deeply into monetary and payment systems, where a private player or a private consortium can tread into the realm of government, or at least the realm where government boasts, or that we trust in government, is able to regulate where the market is failing. And I suppose we define market failure then as monopolies, you know, that are bigger than any one government. So it is interesting. It was interesting to see how quickly regulators around the world responded to the Libra Association's global stablecoin proposal. And your key words there, I think, were instantly systemic. So that, you know, it's not traditional in the sense that we would see demand accumulate over time, and we have time to develop a regulatory framework and a response. It becomes instantly systemic, so that almost overnight, at the switch of a button, we need to be prepared to respond and to protect consumers and businesses in a whole new environment. So it's all interlinked, and I'm fascinated by your papers and your discussion. So that's Libra. So can you take us into now the systemic effect of the DCEP?
Well, thank you, Joni. Well, the DCEP is a form of a central bank digital currency, a term that is prevalent now, I think, in my earlier paper called Cash to Cryptos, to Sovereign Digital Currencies. We went through all the terminology, and I think our favorite term was sovereign digital currency, to be an all-encompassing term, to cover also the types of new currencies that issued by the state or on behalf of the state, but not necessarily by the central bank. So the CBDC, well, I'll refer to it for now, because it's really the most used term these days, especially for central banks. Flash news: central banks like the word central bank digital currency, if you didn't know. But essentially at the core of it is the idea that this new type of currency is a new form of central bank liability. It's denominated in the existing unit of account, which would mean US dollar, Australian dollar, Yuan or DCEP, and the two key characteristics that are highlighted in the literature right now are the use of this central bank liability as a medium of exchange and as a store of value. So as a currency and also as a store of value. And importantly, I think, to understand, so several years ago when we were starting, there was research in parallel with the research done by the international bodies. So we didn't even know how far the individual regulators had progressed by that time. There had been some projects, but they were in very early stages. And it's quite useful that the Bank for International Settlements has been conducting surveys year to year to measure the level of interest in these projects. And in 2018, they had the first survey. They covered central banks of less than 100 jurisdictions, but those were sort of the biggest central banks that represented countries with over 80% of the total population and 90% of global economy. So that's quite representative. And about 70% of respondent central banks at that time said that they were working on central bank digital currency or were planning to work on a central bank digital currency. And a year later, the number increased to 80%. So that's a lot. But it doesn't mean that everybody is secretly developing its own. It could mean just theoretical research. It's just a level of interest. And frankly, it has been largely theoretical research at least before Libra.
Just to pause right there, did you see the announcement that MasterCard who were an initial member of the Libra Association and subsequently pulled out, they have now launched their own trial environment for central banks to experiment with a retail version of central bank digital currency.
So you have to know where the wind is blowing, and it's clearly what they must have read our paper. What can I say? And it was 2 years ago. They could have started much earlier. I think it's there. So I'll take the credit for that. I know my contributions for Mastercard anyone, but whatever. So thank you so much, Joni, for putting me into the financially lucrative direction. But you know, there's a lot of interest in a CBDC, right? And even 2 years ago, there was a lot of interest when we wrote our initial paper. But back in the day, what we were writing about was considered blasphemy. Central bank digital currency, nobody needs that. And even today, if you look at the project that actually preceded past theory, past proposal, past interest, past papers written by central bankers, which seems to be the prevalent way of addressing those issues, even by the RBA. The actual pilots, there are not too many of those out there. Around 20 actual trials. And you know, the projects that do exist and that have been launched, and especially retail projects, they're not representative at all. Ecuador launched something resembling central bank digital currency in 2014 and shut it down in 2018. Venezuela launched its Petro, and amidst hyperinflation for different reasons. So the closest we probably have to launching an actual central bank digital currency by a developed economy might be Sweden or China, I don't know. And Sweden has started its testing a bit earlier in February 2020, I think, ahead of China. But China, with its DCAP, is probably stealing the headlines. So, and the DCAP is a strange abbreviation. It's just a technical name of the digital yuan. That's what the description. And I'm unfortunately I don't read Chinese, but these are the DCAP. These are the only letters in the description that were in English. So that's why it became known as the DCAP. And when it launches, if it launches, it's probably going to be the first major economy CBDC. And it was announced shortly after the Libra announcement. The trials were a bit later, but today trials are ongoing in China in several cities, and so the rollout, there is potentially planned rollout on a broader basis throughout the country. And I really don't want to go into much detail, but the DCEP does include, although it is obviously state-backed, but it does involve the existing infrastructure in the project. Top-tier intermediaries, the largest payment platforms in the country, they are on board. So the existing infrastructure is being used. But the governance of the platform is centralized. The People's Bank of China is in charge, and finality will be achieved by a final settlement across central bank accounts. So that's that. But frankly, at this point, there's too much speculation going on. The information is keeping under wraps for the most part of it. So we covered the information we had, the reliable information we had in our paper, but we're looking forward to more information on the launch of a DCAP.
I think we all are.
Yeah.
And so, one of the subjects that is commonly discussed, in this topic of CBDCs, and I'll use that term mostly throughout, because the discussion has been dominated by central banks and the paper's initiated by central banks, rather than another regulatory body or at Treasury level, for example. But let's dwell on China's vision for the DCEP just for a moment. So in the paper, you suggest that once the digital yuan is enabled for use in foreign trade transactions, much trade with China will likely, for reasons of efficiency and convenience, be denominated in it. and that this will result in the growth of the global importance of the digital yuan and much valuable information about each trade ending up in China and not the trading partner's country. And if I could just add, most of the discussion around CBDCs and pilots focus on purely domestic use, so only in-country use of that central bank digital currency. The concept of allowing your sovereign digital currency to cross borders and to be, let out in the world comes with great concern, particularly by central bankers, around how do we track the use of our CBDC and what responsibilities do we as perhaps an Australian government have for the use by bad actors of our central bank digital currency, for nefarious purposes overseas. So I'll just add that as context. And but if and when that international trade puzzle piece is unlocked, and if China is the first one to unlock it, why aren't other countries racing to issue their own sovereign digital currency, at least as a defensive position to collecting that trade information, if they're not going to be adopting a leading innovative position?
Yeah, thank you, Joni. That's a big question, and I think my initial response would be yes. Well, the regulators they do race, but they race slowly. That's how they usually behave. But I think the CBDC projects that, although there are many, and although there's a lot of interest, largely, if you look at the past projects, not the DCEP, but the many projects in Canada and Japan and other jurisdictions in Asia and Singapore, in Thailand, those were largely solutions looking for a problem. So the approach was mostly what if. So what if we use DLT in settlement? What if we do the RTGS platform on DLT, distributed ledger technology? Will it actually work? What are the problems? Are there any savings? And you read all this kind of, you get this kind of impression by reading the reports produced by central banks working on these pilot projects. And I particularly liked the response of the European Central Bank officials in May 2020, earlier this year. They sort of considered they needed to say something about the central bank digital currencies, because everybody is doing it apparently, and they had the projects described as central bank digital currency related. And one of the senior officials sort of made a speech at the beginning of in May. And you can see how pragmatic the regulators are. So the point there was the European Central Bank is one of those central banks that positioned themselves as interested in the CBDC and that Bank for International Settlement questionnaire, but not because it's fashionable, but because we have to be ready. That's sort of the point. And then the person, I think it was Yves Mersch, the senior ECB official, added that cash tends to get a lot of press, but we can see that demand is not receding in Europe, at least. Well, not throughout all of Europe, but mostly throughout Europe, cash is still being used. So if there is a CBDC project in the making, we just have to be ready when there is a business case. But so far, there's just no business case. That's the logic of the ECB at the beginning of the year. And in terms of research, you can see that regulators are getting ready. The Bank of England published its own research agenda. The European Central Bank went further at the beginning of this year. They published a call for papers as part of their legal research program that advertised for research on the legal aspects of launching a digital euro. So they want research in this space. As you can see, they're all getting ready, but as regulators really want to wait and see. And this really works until you get something that breaks the paradigm. right? So, and
Instantly systemic,
yeah,
for
unless you get
example.
something like global stablecoin, or you have the DCEP suddenly on your doorstep. So that's that. And really then the key, and then suddenly a lot of questions arise and you don't see ready answers. This is when and how are you going to prepare this central bank digital currency? And one of the biggest issues I can see, and I think one of those, I think it follows on what you, Joni, said earlier, when somebody comes to the central bank, some bigger developer, maybe software developer, maybe a payment system operator, maybe someone else with a ready solution, then the solution is itself a black box for you. And then, of course, if a state runs a central bank digital currency, and God forbid there's a backdoor, some problem, maybe it's not intentional, but some issue with it, and it doesn't, and it cannot control this black box, then imagine the consequences, reputational damage for the central bank and the government that sanctioned that. So, but there are other issues. So first of all, yes, wait and see, and there's no business case, except maybe for some jurisdictions like Sweden, where we can see a major decline in the use of cash in the country. So you have to do something quickly. But also results are inconclusive. If you look at the reports, Canada's project Jasper, which had multiple phases of testing of a wholesale sovereign digital currency, eventually concluded as part of phase 3 that the project wasn't sufficiently broad to determine whether it would result in significant cost savings or efficiency gains. The same we could read in the Bank of Japan research paper. So essentially, we don't know if it's a good thing, but it's technically possible, yes. And also there are legal reasons. My final point here is that really there are legal reasons. And probably the notorious example is the Estcoin, Estonian cryptocurrency. It has a long story. Initially, it was known as Estcoin. It was suggested first in 2017 as part of e-residency program in the EU. It was supposed to be some kind of government-supported ICO using these coins, but then they had to scrap the proposal, this so-called cryptocurrency, very quickly, following the criticism from the European Central Bank. I think Mario Draghi was the president at the time, who stressed that no member can introduce its own currency, so it should be for Euro area members, it should be Euro central bank digital currency, and maybe we're moving in that direction under Christine Lagarde, but we'll see.
Oh, it's fascinating, and I think the advantage that the Eurozone has over us. I mean, in Australia, we have states and territories, and in a sense, we're focusing on harmonisation and uniformity, as at each state and territory border, to get to the point of codification or ability to codify and use digitally native products. But the EU, they've got a number of countries within their Eurozone and their membership base, and a lot of power brokers and power positions that are wanting to advance the cause or detract from the cause of uptake central digital. So it's a very interesting political environment to see it play out. I don't see that we have our premiers necessarily all taking a proactive position in the debate around an Australian CBDC, for example, or sovereign digital currency, I should say. So now on to the role of your national payment systems. And so we have the new payments platform, NPP, which is often referred to by our central bank, the Reserve Bank of Australia, and other policymakers as a reason why there is marginal benefit only in a blockchain-based digital currency. But is the NPP, a fast settlement system, enough to compete with the likes of purely digital and immediately international currency, particularly the DCEP and Libra? And perhaps, Anton, you can take us through your response, beginning with explaining and unpacking the difference between a fast payment system and a fast settlement system, as well as the domestic limitations of the NPP.
Oh, yes, sure. Thank you, Joni. Well, I think the comparison really is not very fair between a fast settlement system and a new type of currency, a new type of central bank liability. But in terms of the definition of a fast settlement system was pretty straightforward, really. It's just it's a type of it's a type of payment system where payments are transferred in real time or near real time, or close to 24/7 basis, or as close to 24/7 basis as possible. I think the BIS, the Bank for International Settlements, has a definition along those lines. But having said that, the objective of the fast settlement system is really the convenience to the end user, and the rest is held. The settlement process still happens, and different approaches exist in fast settlement systems. In some cases, the settlement occurs immediately, and there is even recourse. They may be even recourse to central bank accounts. But in many other examples of fast settlement systems around the world, there is deferred settlement, actually. So it's not even a real-time settlement. It's real-time settlement for the user, on the user's part, but not the final settlement within the top-tier intermediaries. So the banks sitting there at the top and exchanging. So it really depends on how this is structured, but in relatively rare cases, now they're getting less rare, but it used to be rare cases in the past when the fast payment systems really offered immediate settlement. And Australia's NPP is relying on the fast settlement service, which is built by the Reserve Bank of Australia. So we have one of the more advanced types of fast settlement of fast settlement systems around the world, and the vast majority of payments are settled in real time. But if you try to put an NPP next to CBDC, or they use those terminology that we're using, it's not really, or stable coins, Libra, right? It's on a purely academic, technical level, it's not really fair, because stable coins and central bank digital currencies, I think, as I mentioned, are used not just for payments, it's also store of value. So you have to have some kind of, so you don't rely on it just for this transfer of value between you and somebody else. Although, so and potentially, if you compare it to Australia's dominance of 4 banks, or 4 big banks, you may think, okay, it's probably not that much of an issue for Australia. Probably it isn't that much of an issue. So we have 4 big banks, and money held in those 4 big banks is probably relatively safe compared to Libra, which we don't know how it pegs its money to its value to the basket of currencies or securities or whatnot. Considering your money is within the financial claims scheme, which has its limits, and there are proposals to reform it.
And I think in Australia, is it that each account is effectively insured to the level of $250,000?
Yes, the FCS limit, it used to be bigger. So it hasn't been around for ages. It's post GFC development, right? Financial claims scheme. Now the limit is $250,000 per account holder per ADI. So if we consider those the big 4, well, there's a lot of safety, but it's not just the big 4. If you consider the smaller ones, you may think more about the relevance of the limit of the financial claims scheme.
And if I can just overlay a crypto world insight here, just for the audience to contextualize what we're talking about. And I'll use Bitcoin as an example. So you mentioned, for me to transfer 1 Bitcoin to you, that is a transfer of value. And the Bitcoin ledger records the state. So as soon as that transaction has been completed, my state balance is reduced by 1 Bitcoin, and your state balance is increased by 1 Bitcoin. And the settlement is instantaneous or near instantaneous, because Bitcoin transactions are validated every 10 minutes or so, which is the approximate time it takes for the nodes to validate a block, roughly. And it can be longer in periods of high congestion, for example, where there are a lot of transactions coming through. And so that explains the state-based recording of my Bitcoin holdings and the transfer of value. But because there are no assets, real or intangible, that underlie the value of Bitcoin, even though I hold my Bitcoin balance less 1 Bitcoin, so let's call that 5, the Australian dollar value of that Bitcoin will fluctuate because I don't have a store of value confidence, nor do I have a financial claims scheme, insurance scheme that protects the $250,000 worth of my value. And within crypto world, we have insurers, decentralized insurers popping up like Nexus Mutual, where I can take out insurance for the position that I'm taking with another protocol. Perhaps it's Bitcoin, perhaps it's another lending protocol, to ensure the position. So if I am wronged, or if for any reason the technology fails, I can call on Nexus Mutual to provide insurance for my cryptocurrency position. So that's also a very new development, really only in the last couple of months, I'd say. And because it's new, it's still to be tested and to build its confidence. But I just add that by way of context for the audience to follow some of these concepts that we're talking about. So I think that actually completes the question. And to go on to the next one, Anton, do you think, to contextualize where Australia is at, could you spend a few minutes talking to us about what the UK and Canada and Singapore, and if we have time, Thailand as well, are doing with their payments infrastructure and in relation to their own sovereign digital currency?
That's a lot of jurisdictions to cover. I'm particularly interested why you prefer Thailand as a named jurisdiction, as a named project, because they have a fancy name of their projects, Project Intanon, named after the highest mountain in the country. But
a couple of reasons, actually, and one of them, there's some reports. I'm an Australian tax lawyer by trade, but there are some reports that, and please, would the audience verify this for themselves, that some, if not all, cryptocurrency transactions there, if you're a resident there, are not taxable. So for the Bank of Thailand to provide the on-ramp effectively, so the purely digital sovereign digital currency, it provides very easy access into cryptocurrency world, upon which it doesn't appear that they have clear application of any of their own taxation regimes.
Thank you, Joni. Well, I can see the importance, though we may have to wait a little bit until Project Intanon in Thailand develops into more of a retail version of its current self, which has largely been a wholesale settlement initiative. And really, the jurisdictions to look out for would be China and the US in the long run, but considering that you started with the UK, I think the Bank of England has developed an entire agenda. It's been on their website.
Countries, those that we commonly, also frequently compare ourselves to.
Yeah, absolutely. So they had the UK has had this plan for quite a long time. They had a list of questions on the website. And very recently they published their own theoretical researches. So they did it interestingly. They published staff working papers, which did not represent the views of the central bank. That's what many do. And finally in 2020, they published a discussion paper, largely a theoretical exercise. But Canada that you mentioned, I think you mentioned Project Jasper already today. Canada is interesting because it's a developed economy on the one hand, but not the biggest financial center. I hope there are no Canadians listening, but no, it's really not one of the groundbreaking changes in the world if Canada would launch a CBDC. So I think that's why we're looking at it in our paper, in a sense that it might be more relevant for most jurisdictions around, most developed jurisdictions around the world that are planning to issue a CBDC, but who are not, who don't have to fear that what they do will have instant systemic implications for the rest of the world, or at least major systemic implications. And so the project Jasper was largely a wholesale central bank digital currency research exercise for a long time. And finally, in February 2020, the Bank of Canada published a document that essentially analyzed contingency plans for CBDC, for launch of a CBDC. And the word contingency is telling here. So the central bank is considering the development of a CBDC if it becomes necessary. And the central bank itself was considering really two reasons that would spark this necessity. Either Canada would be moving to cashless society, that's the development we can see in Sweden, for example, or if Canada's monetary sovereignty is threatened by a private digital currency, read Libra. In our paper, we argue, well, this is not necessarily all there is to it. There's probably a third reason, third concern that would really prompt Canada to move into the direction of a CBDC, and that is the issuance of the DCEP, the Chinese project. That is the issuance of a major economy-run central bank digital currency by a major competing economy, especially if it's your trade partner, if it's your major trade, one of the major trade partners. So right now, Canada, I think the view is that there's no immediate rush towards a CBDC there. By the way, unlike Sweden, where there is a demonstrated reduction in the use of cash, and so it seems like Sweden is proceeding more swiftly. So we might be looking at Sweden as one of the examples in the coming years. Singapore, I think you mentioned, yes, Singapore, just like Project Jasper in Canada, Singapore's MAS, Monetary Authority of Singapore, had its own project for several years, multi-stage project. So it started as a Ethereum-based central bank digital currency, Singapore dollar equivalent. First, they tested it for interbank payments, whether it will work. Then they tested using DLT-based real-time gross settlement systems. And subsequently, I think the third test was using central bank digital currency in derivative settlement, so settlement of securities against official currency. But they're still far away from a retail project. And as for retail projects potentially coming, in the coming years, maybe we should look out for the digital dollar announcement this year as potential response to COVID-19, which does offer a range of options still in the early stages, but I think it's one of the major disruptors.
Just on the digital dollar for a moment, we're all following that very closely. Why do you think it was dropped from the COVID legislation before it was, those measures were given a proper opportunity to be considered and debated among US parliamentarians?
Well, I'd hate to say that this is yet one of the emotional responses, because the US lawmakers are known for occasionally coming up with rash proposals, and one of those was last year in relation to Libra. I think one of the proposals was literally to ban major big tech firms from entering the financial services market. It was obviously just a proposal. It never came to life, but it was there. It was a draft bill. So we did see the digital dollar proposal at the beginning of the year, and obviously to discuss it in more detail would take would take a lot of time. I don't want to say years, but it would take a lot of time. And I think the COVID-19 package was supposed to be a quicker one, and so one of the possible reasons was this, not to delay the whole project. But to me, one of the bigger issues is that the digital dollar project as currently formulated is much bigger even than the current digital yuan project, which has been developed for years as far as we can tell. So it's not just a digital token and the digital dollar. It's also a universal account-based payment system built into and providing own account with the Federal Reserve. It's such a big change, and I think it's just the scope of it all is in the face of every other jurisdiction that's not really pushing as hard. Well, if we discount China, it's not that much of an urgent matter at this point, and China doesn't look like to be does look like it's going to launch its DCEP right now. The tests are still coming, so it didn't look like US was trying to be the first by all means.
Well, and let's go on to this. So, we've talked about what states are doing, Sweden, Singapore, Thailand, Canada, UK, digital dollar in the US, and the DCEP in China. But we've also mentioned some of the private actors. So we've got the Libra Association that have announced Libra. And in your paper, you and your co-authors predict that neither a fully private alternate payment systems nor strictly public sovereign digital currencies are likely to dominate. But rather we expect hybrid models involving partnerships between the public and private sectors most likely to emerge in the wake of these three systemic catalysts being Libra, DCEP and COVID-19. However, your paper also highlights that the central bank is generally responsible for maintaining the monetary stability and financial stability in order to underpin our wider wider economic objectives, and that monetary stability is based on a chosen currency, the legally mandated form of money. So if there are going to be a number of currency options, in 1 year or in 2 years or 3 years' time even, how will Australians be able to navigate the range of options, and how will the RBA be able to stabilise the AUD or the EAUD if they don't have proper oversight and control over the range of cash and cash-like things that people are using?
Well, first of all, I think the important thing to remember is that if we see an EAUD, which we'll probably not see anytime soon, this new sovereign alternative will not remove all the many other options that already exist. It will not remove Tether, Bitcoin, and thousands of alternative currencies. It will simply provide another one that is extremely safe, potentially, but it will not magically allow the RBA to control cryptocurrencies. It's just an option. It's just an option that central banks may like in the long term, especially because it gives not just greater surveillance options, which we might not enjoy, but it gives more options from the macroeconomic perspective. It allows you to use those tools that you could not really use in the past, like negative interest rates. Those things are possible if so long as there is no cash, right? So long as people cannot escape into cash and all you offer is central bank liability. But the important thing really to remember is that you would still have choice. You would just have this alternative. But the important thing here, I think, for everyone will be to see how does the link to the central bank liability work. How it's like stablecoin in a sense. If we see direct central bank accounts, maybe. If we see, as we're predicting, something that incorporates commercial banks into the system, then the question is how do we ensure that there is no intermediary risk that we already have now in the banking system, the bank accounts, the bank deposits? Is there an actual change happening, or is maybe the RBA at some point will decide to implement DLT? The ASX is transitioning to DLT for reasons, and keeps going essentially after its announcement. But to me, the question is, why, what's the economic justification for a central bank then, if there is no direct link to a central bank liability? Why would you just complicate things and have, there are some interesting potential developments, like potential for use of smart contracts and so on, programmable money, maybe, but we would need to see what the logic is. And in our paper, we really focus on three alternatives. Central bank, how it is likely to how the central bank digital currency is likely to operate: central bank account with general access, central bank account with intermediated access, or just new digital forms of fiat currency. And so, we just need to see. But I think really for the RBA initiative, we have, so for developing countries, the biggest issue really is the central bank issuing sovereign digital currency reliable? Is it sufficiently tech savvy? Is it able to infrastructure and architecture? Perhaps in Australia, we have a really sophisticated regulator, and this is not so much of an issue. So for me, the safety and consistency of the whatever we may see as an EAUD in the future is paramount, because one flop, the use of black box is a problem. And as for how to manage it, well, even in terms of organizational structure, the RBA has the tools, Reserve Bank Board. So you have essentially two boards within the bank, within the central bank, focusing on these issues. And I think they would need to work jointly. The Reserve Bank Board, it focuses on the monetary stability, which will be relevant, and the Payment System Board, which focuses on efficiency of the payment system. And even the legislation currently provides the opportunity for them to come in conflict, and they might be conflict within. Under the law, the Reserve Bank Board would have priority over the Payment System Board under the Reserve Bank Act. Oh. So we shall see. Yes, it'll be interesting to see if within, they have slightly different membership under the statute. And it'll be interesting to see if the two, because the central bank digital currency, in a sense, especially if we're talking about a platform that combines the state and private participants, this intermediated structure, it will have both implications for the monetary stability and for the efficiency of the payment system. So we'll see how the two boards within the RBA and the additional membership will grapple with this issue. It's going to be fascinating, I think.
I can't wait to see that unfold. And I know we're coming up to time, so this is going to be the last one. And to summarize, there are two broad policy objectives that dominate payment system design. You go through these in your paper, one of which is safety, which incorporates stability, integrity, customer and data protection concerns, and the other being efficiency, including cost efficiency, competition, and innovation. And so also in achieving systemic stability is the role of licensing requirements, regulation and supervision, as well as restricting access to the real-time gross settlement systems to large regulated institutions. But Anton, in closing, can we imagine a world, or at least in Australia, where digital currencies prevail? What does this look like for you? And what do you imagine are the systemic risks? And who should be responsible for managing them? Is it one or many bodies?
I'd like to imagine this. Thank you, Joni. I think again, I'm asked to talk about the future, and that's probably what academics try to do all the time, talk about the future. I think in terms of major systemic issues, central banks that have run pilots have already flagged some of those issues, and really trying to discuss all of the systemic issues would take a dissertation as a minimum. I tried when working on a draft of this paper. I just wrote down the list of issues, and it was like 15 pages, just bullet points without any context. So there's a lot, and they can be grouped into several categories. Well, first of all, of course, technical issues. I briefly mentioned the technical issues like black boxes, right? And there are so many design choices out there. which kind of technology you're going to use, what kind of cybersecurity protections, which probably is a nice intro to one of our subsequent talks. How will cybersecurity work in this context, in the state-run platform, or potentially PPP involving the state and private participants? If it's DLT and if it's blockchain based, how will mistaken payments be rectified? What kind of information will be stored? So there are a lot of question marks over there. It's not sort of systemic issues, but they can grow into systemic issues very, very quickly. And what kind of identification is going to be used? And this in turn raises issues. For example, if it's biometric system, we are talking immediately about some kind of state-run biometric system. Some jurisdictions do have this, and state-controlled, and then a central point of failure. Again, systemic issue straight away. But the elephant in the room, no, not really an elephant, because everybody's talking about it. So obviously the impact on competition is going to be major, on not just on banks, on any payment system providers, on payment system intermediaries. And in the worst case scenario, and I think you can hear it from every toaster in the academic space, that an immediate commercial bank run would be super easy when you don't even have to go there. Just run out by pushing a button and getting your money out, or forgetting about fractional reserve system, whatever. So these things are there. They're not going away. So the big question is how to level the playing field, because no one wants to destroy commercial banks. And so there are many ways to make the platform, central bank digital currency platform, less attractive. From negative interest rates to caps and so on. So there are, again, design choices to avoid systemic issues, so to say. For many jurisdictions, the big issue is, of course, trustworthiness of the big body administering all of it. If it's an RBA, probably trustworthy. For other jurisdictions, well, it's a big issue. For many jurisdictions, having a Libra, a stable coin, I'm not talking about a central bank digital currency, is much more preferable to having their own central bank, because there's no trust to it. It's like Facebook is more trustworthy than the central bank, which probably says a lot about the central bank. And of course there will be legal issues, but I think these, frankly, these can't be resolved. To introduce an EAUD is possible. It's not going to be a major issue as soon as we have done with the competition problem. So to me, that's just the bigger thing. And my final point here is really that who should be responsible? So far, the projects are domestic, right? They are all internal, and we're sort of hinting at it in our paper, and when we're presenting elsewhere, and sort of maybe it's blasphemy, but we sort of expect the DCEP to maybe formally be used internally within China, but it doesn't really travel anywhere, right? So it doesn't have legs, it doesn't fly airplanes, but it's still, in the future, it might be open to foreign users, and obviously create pressure to switch to the use of this platform. And so, but in this case, really, as to who will be responsible for stable coins like Libra, the easy answer would have been, hey, let's all band together, we have a common enemy, and let's regulate it out of existence. And frankly, that's what happened without a formal regulation. It just said, hey, just don't do it. For central bank digital currencies, it's not that easy because there's no common enemy. As long as you have central banks talking to each other, some of which have a project running and some don't, so you have diverse views, diverse, so complete different points of view from which they will be sitting at the table and discussing this matter. So I think this issue is going to be very resilient to international regulatory harmonization, at least at first.
Well, thank you. I mean, we're on the hour and I have at least 3 other questions to ask you, but we'll stop there. And I think that, as many central banks are researching and piloting blockchain-based digital currencies to at least be ready, as you say, I think you call for it in your paper and in the submission that I provided on behalf of Mills Oakley to the Reserve Bank of Australia's review of retail payments regulation. We're both calling for proper trials to commence as soon as possible. I think that one of the phrases that a number of central banks are pinning themselves to are that there isn't sufficient demand for a CBDC or even for stable coins at this stage. They're not seeing it being taken up by the retail consumer base. But some fantastic insight from Steve Vallis, who is the current CEO of Blockchain Australia. He said, people aren't going to know whether it's a blockchain-based digital currency or not, but if you put it out there for trial and for use, people are going to start experimenting with it. And particularly for our startups and for their competitiveness internationally, for innovation that does rely on purely digital currencies and being native to the blockchain environment, which is global, we're doing them particularly a disservice in not being able to access an Australian stablecoin to link in with their innovation that they could bring Australians and Australian businesses along with. So I think we're both calling for trials or even observership programs to commence as soon as possible in terms of what our startups are working on, and as well as what our existing businesses are working on that could benefit or have a leg up if they had an EAUD to play with. So I'll thank you very much for your time again, Anton, and to Marina at the Australian Society for Computers and the Law for sponsoring this session. And over back to you, Marina.
Thank you, Joni. Thank you, Marina, too.
Thank you both. Thank you, Joni and Anton, for your expert discussion. So very accessible, but so very deep. It was, I'm sure, be well received by everybody listening in. For those tuning in, please join us for the next session, which would be on the future of fintech on the topic of cybersecurity and regulation in the financial sector, proudly brought to you this time by the Australian Society of Computers and Law, the Digital Law Association, and the 5th FinTech Awards.